pleasure to be here talking to you. My name is Otaviano Canuto. I'm a senior fellow at the Policy Center for the New South. And let's talk about digital currencies. Well, digital currencies, they represent a significant evolution in the world of finance and technology, encompassing various forms of money that exists in electronic form. Well, money functions comprise being a store of value, a unit of account, and a means of exchange or payment, and trust by its users. While the money performs those functions, is of the essence for the well-functioning money and payment systems. Well, nowadays, fintech is revolutionizing the financial sector by improving the quality and availability of products and services, as well as payment and transfer methods. Digital currencies are those currencies that are available exclusively in digital form and not in physical form. And there are three main types. First, obviously, the cryptocurrencies that have been created since the first decade of the new millennium, central bank digital currencies, and some virtual currencies. Those virtual currencies are simply digital currencies typically used within a specific virtual environment, such as online games or social networks. I'm not paying attention to them. But they are the cryptocurrencies, which are the decentralized digital currencies that use cryptography for security. And there we find examples, the original one, Bitcoin, but also Ethereum, Litecoin, and several others. Well, those digital currencies, well, and then we have, of course, the central bank digital currencies, the third and major and increasingly important form of the digital currencies. So central bank digital currencies are digital versions of cash, but issued and regulated by central banks. So they do not correspond to completely anarchic, completely decentralized matters, ways, means, just like, it was the case originally of Bitcoin and so on. So the central bank digital currencies, they will correspond to digital money denominated in the national unit of account and liability of the central bank. Okay. Well, by mid-2022, we had already almost 100 central bank digital currencies being subject to research or testing, right? Even in Africa, for instance, two had already been launched. One of them in Nigeria, the INAIRA, and the other one in the Bahamas. And according to a survey by the Bank for International Settlements last year, 90% of central banks were undertaking central bank digital currency analysis or projects. Okay. Well, why? What are the consequences? What is the impact? Well, look, there are challenges and opportunities. Challenges. First of all, it may be that the digital currencies will push for disintermediation, that is to say, a reduced role of intermediaries. The banks, the payments will no longer be necessarily made through banks. It may also, the digital currencies, increase the possibility of financial inclusion, because with cryptocurrencies and mobile-based digital wallets, millions of unbanked and underbanked individuals worldwide might get connected, especially in regions with limited banking infrastructure. Cross-border transactions will also be less costly because of the less need to have intermediaries. Obviously, as well, the digital currencies will have opened paved the way for innovation in financial products. On the other hand, particularly in the case of the non-official, the non-central bank digital currencies, we are seeing a large scope of volatility and speculation, right? How to make sure that one has security. The Bitcoin and other digital cryptocurrencies, they do rely on blockchain technology, that is to say, clusters of interconnected computers through which you guarantee that the space for forging is little. But on the other hand, with the possible use for illegal activities, given the privacy, is also something to be concerned with. Now, particularly the central bank digital currencies will be fundamental in guaranteeing that one has some sort of overview by some authority. Well, the challenge, as I said, consumer protection against frauds and scams, and given the fact that when consumers have some level of protection and recourse, digital currency transactions can be irreversible, complicating dispute resolutions and so on. Anti-money laundering and counterterrorism financing, as I said, given the privacy of the deposits, but in any case, the future trend is toward increasing use. If any of you may be interested, I produced with my colleague Tayeb Ghazi a piece that was part of the annual report about the African economy of 2022 by the Policy Center for the New South, and on exactly central bank digital currencies in Africa. So therefore, the point to make is that the future of digital currencies, particularly as it moved towards completely widespread use of central bank digital currencies, opens, let's say, even though challenges remain, but it opens a good look in terms of perspectives of reducing intermediation costs, inclusion, efficiency, and so on. One major doubt is whether central banks will prefer wholesale or retail types of central bank digital currencies, because the more retail it is, the higher likelihood that the banks will have to strive hard to keep their existence as intermediaries. Thank you.